Welcome to Money Chat Now. I am your host, Larry Steinhouse, and today is Wednesday, September 8th. Hey, look, Money Chat Now is brought to you by Investor Schooling, and I want you to know that you can attend a complimentary class this Thursday by going to investorschooling.com. Here's the deal, folks. If you want to learn how to invest in real estate, you want to learn how to invest in the stock market, go to investorschooling.com, and you can actually attend a class tomorrow. By the way, don't forget, if you like this show, hit that share button right now and share it with someone who will benefit. Hit that like button and let me know you're enjoying the show. And definitely leave comments and get involved. Of course, don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. All right, on today's show, we're going to be discussing the market update. We're going to be discussing Coinbase's troubles. No more cashiers. That's it. No more cashiers. We're going to be talking about the senior stimulus, and I'm talking about money stimulus for all you guys with a dirty mind. And let's talk about raising the debt ceiling, and of course we'll have some great stock picks. Let's get right into it. The Dow and S&P and NASDAQ all were down today. The Dow Jones Industrial Average fell for a third day on Wednesday as investors reassess the economic growth outlook following a smooth ride in the market so far this year. The Dow fell about 100 points at one point, and the S&P dipped about 0.25%, and the NASDAQ Composite fell more than 0.6% after yesterday it closed on a record, which is pretty awesome that it closed on a record yesterday. And honestly, I don't think that much of a drop, 0.6%, 87 points, is that big of a deal. I don't even think that the Dow dropping 68 points today is that big of a deal. Of course, every single one of my stocks dropped, and, I'm down thousands and thousands and thousands of dollars. I don't even know if I can afford my suit today. No, I'm just kidding. It wasn't that bad, but it was bad. By the way, many investors are embracing for volatility in September, which is one of the seasonally weakest months of the year. Price swings can make a comeback, especially with the S&P up more than 20% this year, but without a single 5% pullback. This 5% pullback is not common, but it's common enough that it should happen, and it hasn't. This is very unusual, and of course it's fooled a lot of short sellers. I know for me, I played the S&P put a couple of times, and sure enough, it was not a good play. A lot of short sellers are playing the S&P or playing some other stocks, and it's not happening. But the question is a pullback coming? One of the catalysts for sell-off could be the Federal Reserve and the potential for it to pull back an unprecedented monetary stimulus. This used to be to support the economy through the pandemic. So they're going to pull it back. I mean, look, they should pull it back. I've been talking about it for weeks that they should pull it back, and they should have probably not have injected as much as they did, but at the same time, everybody benefited from it. I know I did. I don't know if you guys did. Fed Chairman Powell has indicated that the central bank is likely to begin withdrawing some of its easy money policies before year end, though he still sees interest rate hikes in the distance. Once again, I'm telling you, interest rates need to raise. They need to stop this, because if they don't raise the interest rates now, not only are we going to have an inflation as a runaway train, but we're going to have problems where we can't do anything if something else happens. So if there is a real pandemic, not like the fake pandemic we're having now, look, do I think that people are dying? Yeah, I don't want to get into that. But the fact is, it's not a pandemic. It's not horrible. Listen, if we were having the kind of pandemic that these guys are predicting, or these guys predicted, you wouldn't be watching this. Understand? You'd be dead. Anyway, when a real pandemic or something real happens, we're going to have a problem because we're not going to be able to lower interest rates anymore. And that's why I think we should raise interest rates. All right, let's talk a little bit about Coinbase, because Coinbase is in trouble with the SEC. This is going to be one of my favorite long play stocks. I think Coinbase is an awesome stock. I think it might pull back a little bit. It did today, of course. But it's in trouble with the SEC. As a matter of fact, if my team could pull up the Coinbase chart, I want to show you what's been going on here. But let's talk a little bit about Coinbase and what's going on. So the Securities and Exchange Commission is investigating Coinbase over a lending program the company plans to market and has indicated it would sue the company over the offering. So let's talk a little bit about what this lending program is and why it's a problem. Coinbase co-founder and chief executive Brian Armstrong disclosed the dispute in a series of tweets late Tuesday. He called the SEC's actions sketchy and intimidation tactics behind closed doors. This guy's brave, man. He goes on Twitter and starts saying that the SEC is screwing him over. I love it. But look at that chart on Coinbase. It's starting to hurt, but let's talk about it in a minute. And he also said that other crypto companies are already offering such programs. Now, I don't know if they're offering the same type of programs, but let me tell you what Coinbase is trying to do. Coinbase lending platform would allow customers holding a stable coin called US coin to earn interest by lending it to other traders. All right, for those of you who don't know much about crypto, let's talk a little bit about what a stable coin is and what USD coin is. And wait till you hear this because it's almost comical. Stablecoins are crypto assets that are supposed to maintain a peg to national currencies such as, yes, you guessed it, the dollar. And that would be why they probably called it USD, right? US dollar. They're going to make it easier to swap from one crypto asset to another. Coinbase planned to eventually expand the program to include other cryptocurrencies. But let's talk a little bit about what a stablecoin is. So stablecoins are a type of cryptocurrency tied one for one to dollars or traditional currencies and whose value relies on trusting the issuer. Wow. Okay, so let's talk about this. So if they take the US dollar and the USD coin and they say that it's a 1-to-1 ratio with the dollar, whatever the dollar's worth, it's worth $1. So USD is worth $1 when $1 is $1 is $1 is $1 is $1. So why can't we just go to $1? But what they want to do is they want to create a coin that is equal 1-to-1 to $1, which is USD. And if you have $1 in USD, you have $1. And it's always $1. It never changes. Now, the part on the last sentence that goes a little weary is the value relies on trusting the issuer. Yike. So it's not unlike, oddly enough, it's not unlike the Fed who issues this fake money. We're all carrying this fake money around. I don't know if you guys realize it. And we just have to rely on the Fed being the issuer. Stablecoins are the living embodiment of free banking system of lightly regulated and often fraudulent issuers of dollar bank notes that dominated the U.S. finance until the government stepped in after the Civil War. For all of you guys who think a Great Depression is coming soon, I actually believe that cryptocurrency is going to be the cause of the Great Depression. Now, whether cryptocurrency survives after that or not, I actually believe it will. But I believe that just based on some of these facts, cryptocurrency is going to cause the next depression. Paper money was backed by the assets of these banks, but trust in these assets determined whether and how big a discount to apply to given any dollar bill. Alongside the regulated banks with thousands of issuers of small value IOUs, such as from a Michigan barber that will use his money in the frontier towns short of cash. So if we equivalent, is that a word? I don't know. Bitcoin to an IOU or US coin to an IOU, yeah, it's starting to sound just like this was going to happen. Look, only time will tell. I'm either going to be right, I'm going to be wrong, but this is fascinating if nothing else. All right, this is going to get deep, friends, and the phony money theory may come in. But real quick, before we go to a commercial, anyway, Coinbase wants to create the phony interest rate. If you park your money with a stable coin, basically they're going to give you interest on this, and the SEC is calling this a security. And if Coinbase advertises to investors, it will need to follow SEC rules and regulations, such as a PPM or a perspective. Do I think it's going to be a problem for Coinbase? Probably not. It isn't their core product. So if they can't do this product, I don't think there's going to be a problem. The core product is charging a fee for buying and selling cryptocurrency, and that's going to be awesome. That's why I think today may even be a buy moment for Coinbase. It actually dropped below 40 earlier, and I think that makes it a buy moment. All right, let's go to commercial, and we'll talk about Amazon going cashless in a couple of minutes.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Felger Michelle Cohn and Larry Steinhouse about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend investor schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investorschooling.com.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we've been talking a little bit about Coinbase, and we've been talking a little bit about cryptocurrency and their troubles. But let's talk now a little bit about Amazon going cashierless. So Amazon is launching its cashierless technology at 2 Whole Foods stores that are scheduled to open next year. The company has deployed the Just Walk Out technology to a growing number of store formats, including several fresh grocery stores and in its Go convenience stores. Amazon's Just Walk Out technology allows shoppers to enter the store by scanning an app and then exit without needing to stand in a check-in line. Cameras and sensors track what items shoppers select and charge them when they leave. The upcoming Whole Food location, shoppers who want to skip in the upcoming Whole Food, let's do that one more time. At the upcoming Whole Foods locations, shoppers who want to skip the checkout line enter the store by either scanning an app, inserting a credit or debit card linked to their Amazon account, or placing their palm over the company's scanning payment system called Amazon One. Shoppers who opt out of using Amazon's cashless technology will only be able to ring their items up using self-checkout at a customer service booth. So I think about this, and I seriously wonder where the unemployed cashiers are going to get money for the groceries to shop at the cashierless grocery stores. You know, we talk about $15 an hour, and we talk about the benefits of $15 an hour, and of course this is going to be one of the clear problems with $15 an hour. And I'm a big fan of paying people what they're worth. If someone's worth $15 an hour, great. If someone's worth $3 an hour, pay them $3 an hour. There should be no minimum wage. Unfortunately, minimum wage increases, or the fear of minimum wage increases, are what's going to cause this. Now, at the same time, Amazon is one of those companies that they're on the forefront of technology, and they are just technology driven. They don't care about people, they care about technology. I mean, clearly Amazon has seen fire for so many things that it's done. They've seen fire for how they're treating their drivers, how they go through drivers, how they're treating, their depots as sweatshops. So this is just another Amazon thing. In fact, my guess is eventually Amazon is going to have no people in it whatsoever, and that's their goal. Their goal is to eliminate all people. They'll have driverless cars delivering your packages. They'll have or pickers that are automatic pickers, which they can do already, actually. And it's all going to end the people problem. And the people problem, of course, is people problem. The biggest problem with people is people. And here again, it's going to happen. But it'll be fun to watch. It'll be fun to do. It'll be neat to walk into an Amazon store or a grocery store, pick up all your stuff, put it in a cart, and roll the cart out the door without having to pay. I'm looking forward to seeing it, but I'm not a big fan. I'm the kind of guy that I go into Home Depot and they have the self-checkout and they have the regular checkout. The people there, I want to deal with the people. I like to say hello to the people. Hi, how you doing today? I don't know. I find that more interesting. Let's talk a little bit about senior stimulus. The Social Security cost of living adjustment for 2022 could be the highest it's been in decades. The latest estimates from the Senior Citizens League, a nonpartisan senior group, point to a possible 6.2% increase for the next year based on the latest consumer price index. In comparison, this year's bump to benefits is just 1.3%. So last year it was 1.3%, now it's going to be 6.2%. Social Security annual COLA, or cost of living adjustment, is calculated each year based on the consumer price index for urban wage earners, clerical workers, or the consumer price index. With 1/3 of the data needed to calculate the COLA already in it, it's increasing that it appears that the COLA for 2022 will be the highest paid since 1983, when it was 7.4%. Anyone remember 1983? I do. It was inflation at its worst point of its lifetime. Interest rates were 18%. Costs of products were unbelievable. But at the same time, gold skyrocketed. I remember buying, just buying a necklace. And it was ridiculous, the price of gold. The jewelry stores were all on fire because of the price of gold. So if we're going to see this, I guarantee you we're going to see some serious, serious inflation. All right. I'll tell you what. I want to talk to you a little bit about Phil's car, because I want to talk to you about raising the debt ceiling after this. So Phil's car is still available. If you want to get Phil's car, you can get it. Here's the instructions on how.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we've been discussing several topics such as the Dow Jones and the market dropping a little bit today. We've been discussing the fact that seniors are going to get a 6.2% increase in their Social Security benefits, which I think will be great. We've discussed inflation, and that leads us to the next topic, raising the debt ceiling. So here you go. This is where I am going to vary from people who are Republicans, and I'm going to tell you what I believe the truth is. So according to the U.S. Debt Clock, by the way, if you ever go to the usdebtclock.org, it is fascinating just to watch the debt go up. The U.S. is in debt to the tune of $28 trillion. By the way, that makes the debt per citizen equal to $86,000. Nah, you owe $86,000. When you hear these numbers, all you want to do is yell and say, hey, that's not fair. Stop spending the money we don't have. Well, my fellow citizens, I agree with, I hate to say the word, Nancy Pelosi and the Democrats who want to raise the ceiling right now. Huh? Yeah, let me explain. Treasury Secretary Janet Yellen warned House Speaker Nancy Pelosi that the mere specter of U.S. default can have drastic consequences for U.S. financial markets and urged Democrat leadership to raise or suspend the debt ceiling as soon as possible. Suspend means like we don't need to do this anymore. We just do whatever we want. I actually like that idea. Yellen reiterated that lawmakers have until some point in October before the department exhausts its extended efforts to prevent what could be an historic default. Scare tactics. A delay that calls into question the federal government's ability to meet all its obligations would likely cause irreparable damage to the U.S. economy and global financial markets, Yellen told Pelosi in a letter dated on Wednesday. So why do I agree with Yellen? Well, here you go. Let's talk about this, right? So a delay that calls into question the federal government's ability to meet all its obligations would likely cause irreparable damage to the U.S. economy and global financial markets. So first of all, I disagree with that. It won't be irreparable. It'll be serious damage, but it won't be irreparable, because here's what happens. Unless Congress addresses the ceiling, payments on Social Security, Medicare, military spending, interest on U.S. debt, and other obligations will simply halt. So in other words, They won't pay Social Security, they won't pay Medicare, they won't pay military spendings, they won't pay interest on the debt, and other obligations may simply halt. First of all, real quick, I have an objection to this. The fact that Social Security is going to be dropped, hey, that should be in a different account. But hey, that's been taken away from it. But here's the real reason I agree. If this happens, it'll only be temporary, and someone will eventually give in. In this case, probably the Republicans, who, understandably, or at least claim to understand budgets, will be the holdout. However, they'll give in eventually, and the best course of action is to give in now, because it really doesn't make a difference. Have you personally noticed a change the last time the debt ceiling was raised? No. Do you even know or care about that we're in this much better as a nation? No. It's just a talking point. Here's the real kicker. Who do we owe this money to? Some say China, some say other countries, and some, like me, say it's all fake anyway. If they delay, the stock market goes down, the government pays, dependent citizens will suffer. I'm not saying that I'm not just talking about welfare programs, I'm talking about Social Security, government employees, the military will suffer. So forget the debt ceiling and move on to unlimited ceiling as we have it already anyway. It's just a bunch of hooey. Just do it. All right. Real quick, there's a wrap-up. What a crappy day today it was. I hate these days. Small movements drive me nuts. They tell a story of uncertainty. But here's some stocks that I think are a buy, and I think they'll go down further tomorrow. If they go down further tomorrow, they'll be a buy. Boeing is a play now. Apple below 250. Coinbase below 240. Recovery stocks such as airlines, cruises, and energy stocks will all be great. Material and equipment will pop on the infrastructure bill, such as AA or CAT. I want to thank you again for watching Money Chat Now. Hit that share button. Hit that like button. Come on now. And don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. I am your host, Larry Steinhouse, and I look forward to seeing you tomorrow at the same time.